Welcome back. Good Friday morning, everyone. Thank you so much for joining us this morning. I'm Maria Bartiromo, and it is Friday, May 29th. We are coming to you live this morning from the Reagan National Economic Forum here in Simi Valley, California. It is 7:01 on the East Coast right now. Time for the hot topic of the hour, and that is all about the economy. I sat down with JPMorgan Chase CEO Jamie Dimon here in California. I got his take on the broad macro story, the Federal Reserve with Kevin Warsh now at the helm, and JPMorgan's investment plans for some $40 billion that he says he could use for an acquisition. Watch. Jamie Dimon, great to see you. Thank you so much for sitting down with us.
Yeah, thrilled to be here.
Yeah, I want to get your take. The largest bank, you've got so much exposure to the consumer and to housing as well as to commercial and business. How would you characterize the economy right now? Give us your sense of the macro story.
Well, it's pretty good. What you all your viewers know is that the economy is growing at 2%, unemployment's low, 4.3%, wages not going up that much anymore. Corporate debt's not that high, consumer debt's actually not that high. Inflation is ticking up, that's not good. And you have a lot of stimulus. The one big beautiful bill, $300 billion of stimulus. The additional spending AI is $300 billion of stimulus. Dereg, it's a form of good stimulus because it allows people to put their money to work in a better way. And so those things are good. And a lot of that, but we have a huge deficit. And that's kind of stimulus that also ends up in corporate profits. So corporate profits, are up huge this year. So people are feeling good, stock prices are up, that's all good. And there may be negatives. I think the one that you can see a little bit is inflation going up.
Yeah. Have you seen inflation cutting into consumers' ability to actually spend? Are they cutting into their savings?
Yes. I think, you got to separate consumers into various segments. For the high end, it doesn't do anything. And if you take the higher gas prices, $1 of gas is $100 billion a year. But of course, it affects lower income folks much more. And for them, they have to cut back something else or do something. So what has happened for some is they have cut savings and they still spend. And, and borrowing is going up just a little bit. So it might be that. It might not be sustainable forever, and we don't know what's going to happen with future gas prices. So you do have a little bit of that.
And in terms of the big, beautiful bill that you just mentioned, are you seeing companies increasingly use things like the expensing, the expensing options that were in that bill? Because you can write off so much right now.
No, it's expensing options. It's the R&D credits. It's a competitive tax. I think we also remind we need a competitive tax structure globally, and this is competitive globally. And so that puts American companies in a position where they're going to invest here or elsewhere. There's an incentive to do it here, too. Or at least not a disincentive to do it here and an incentive to do it elsewhere. Before taxes were cut, and this happened in Trump's first term, you had huge sums of money going overseas and staying there because, the returns were so much lower if you could do exactly the same equivalent behavior. So that does matter. So
you feel good about where we are now in the economy, even though inflation is ticking up?
Yeah. I feel okay. I'm a little more worried about other people. I see, it's not their immediate cracks in the economy. It's the other things I worry about that has a long list of serious issues that are going to have to be dealt with. I don't know how they're going to affect the economy this year. You can't put them in a base forecast. They are large items. I always refer to them as tectonic plates moving around that may cause issues that we don't fully understand today.
I mean, it's interesting because this market has been in a melt-up, right? Look at these major averages since the end of March. Are you surprised to see things like the NASDAQ up 28% in the last 2 months, even in the face of two wars that we're watching play out?
I'm not surprised, other than in the face of two wars, that they don't seem to have derailed anything. But you and I have seen this before, where you have these kind of melt-ups, and you often go on longer than you think. So the person says, that's too much. Well, maybe not, because they can go on for a long time before something reverses them. And you don't know what that is. It could be sentiment. It could be inflation. It could be higher rates. It could be business sentiment. Obviously consumer demand. If it drops, that a lot of companies will cut back inventory and the profits will drop and all that. So it's always a confluence of events. Very hard to predict in the next 12 months what's going to happen. And I actually think it's a huge intellectual error to say, here's my base case. What I always look at is what's the range of outcomes. You could put probabilities of those outcomes. My probabilities of a worse outcome are higher than other people's. And it's mostly around inflation driven by multiple factors.
Yeah, but I think the other day you made some news at the Bernstein conference. You said you were cautiously pessimistic.
Yes, I know. I was kind of joking because everyone says cautiously optimistic.
Okay. So cautiously pessimistic. The other thing you said, which I thought was interesting, is you tend to buy back your stock all the time, but you said you're not fond of buying back the stock of JPMorgan at these levels.
I have been very consistent. We are buying back the stock at these levels. I prefer to buy them at lower levels. I prefer to help my existing shareholder, not my leaving shareholder. And we've always believed that investing in our company is better than buying back the stock. However, we have a lot of excess capital, and the stock is, you can call it equilibrium, but I don't like equilibrium. I like to buy it when I think it's kind of cheap and it's a bargain. So Warren Buffett says the same thing, and so do a lot of the people. Buying it automatically, I think it's just an intellectual fault. That's not you should be buying it. If stock price go from here to here, you buy more here and less here. And that's kind of what we do.
So it's the most fundamental thing you learn on Wall Street: buy low, sell high.
Exactly. And then it takes judgment what that is. And it's hard to fight the market. The market says the stock's worth X. Well, it is probably.
Yeah.
But that doesn't mean I want to buy at that price, particularly when I think I can use my capital. That's the other thing I probably mentioned at the conference is that we have all this excess capital, we estimate about $40 billion. I believe now that we can deploy it in our businesses over time. It may take a couple of years because of things like SRI, and I'd rather do that. So if I had no other options, then maybe it'd be more stock buyback.
Yeah, you're talking about your security initiative, and I'm going to get to that in a moment, because you also said, just as you were saying, that JPMorgan is earning 20% as opposed to your target of 17% in terms of a return on tangible common equity. You said that you personally think that you're over-earning. The entire industry is over-earning.
I didn't say the industry. I said us. It just means when you have, our business always has volumes that go high to low, okay? Credit losses that go high to low. Credit losses are kind of normalized. Volumes are quite high. Exuberance is quite high. Profits are made at the margin. The next trade is more profitable than the average trade. And people sometimes forget that. And so I have a little humility, because look at what happens. In 120 company years, between the last 10 years, how many companies earned over 17% in banking? Or earned over 17%? It was like literally 8% of the time. So to think it's going to go on forever is a mistake. It's a competitive world. It's a capitalist world. As Jeff Bezos says, your margin is my opportunity. And we have a lot of competition. And they're coming, and they're smart. I recognize that. And they've done very well. And the base competition is quite good. They're all back. It's not like anyone's weak anymore. And you see that in the numbers. So I just think we should be a little cautious about bragging about our results.
So trading volume is abnormally high right now?
It is high, and values are high. So remember, values drive a lot of things: custody, treasury, deposits, asset prices going up. And so all these things drive a lot of things. And if you model it through, there's another side of that mountain sometimes. And I don't know when that's going to happen. I just think eventually something will happen, and volumes will go down. There'll be a little recession, credit losses will go up, and we'll still be doing fine. And I think actually that's when you perform. It's really important to perform in bad times, not just in good times.
Now, I'm wondering if the Federal Reserve changes is going to be a catalyst for those changes. What's your take on Kevin Warsh and how he's going to approach his new job as chairman of the Fed?
I think the world of Kevin. He's quite experienced in this field, in all fields. He's been in the central bank before. He obviously knows global markets. And I like what he says, which is, the Fed should focus more on the financial system and not so much regulatory. He's right to say, all these years, rule after rule around the world. I mean, Basel III has been 10 years in the making. So is this if we wanted? What was the outcome? Can we make it better? I actually think you can make regulations simpler, less costly, get more loans out there, and make the system better and safer. And I think that should be the goal. And so I hope they do that. And then, rates, I don't know. Remember, he's going to walk in a room with 12 other governors. And so he has his ideas. He's a smart guy, but he's got to give them time to think about it, do some research and all that. So, it won't be immediately. He can't decide by himself on day one what to do.
Well, it's a very different backdrop than it was when he first was expected to take on the Fed. I mean, he was expected to cut rates. How do you cut rates with inflation where it is?
Right, and he'll have to deal with that too.
And the market's expecting a hike in interest rates.
I saw that.
Are you?
I think it's possible. I mean, I don't know. And I don't spend that much time guessing about stuff like that. If you ask me, I can give you all the analysis around why it might go up and why it might go down. I can give you probabilities. I don't know. And we are prepared for higher rates too, and higher credit spreads, which we have not seen in a long time. As people get a little more credit conscious, which I expect to happen.
Now, one thing that Kevin Warsh did say was that he wants to make the Fed's balance sheet smaller, shrink the balance sheet. What does that mean for JPMorgan, though? I mean, what does that mean for a bank like yours, which you've got to keep money at the Federal Reserve?
Well, but we keep money at these things because of regulations and requirements, liquidity rules. So I think he's right. The Fed shouldn't have to intervene every single time there's a kerfuffle in the markets. It's a mistake. It's a policy error that we somehow we got to make everyone comfortable. But to do it, he's got to change some of those regulations and these, the LCR and SLR and certain G-SIFI rules to give banks more flexibility. But the important thing is, it's not to deregulate to make it easier for banks to make a lot of money and then go bankrupt. It's to, I think you would do it and make the system safer. And I think Kevin's quite bright. He probably knows that. And it's going to take a little bit of analysis. We've got a lot of reports to the Fed about how that can be done. I think Secretary Betts has actually spoken about it. To do that, we have to change some of these requirements. But the banks have so much capital and so much liquidity. It's a good question to say, you can never use it again in your life. And for us, it's $1.2 trillion of basic cash and treasuries. Can never use for productive purposes other than safety, which is a good one. But I think we could do it much differently and have more safety. And then we can intermediate more actively in the markets, as opposed to the Fed having to intermediate when the time comes. So.
And Mickey Bowman has been working on this. And
yeah, she is on top of all these issues, yes.
Yeah. Jamie, let me get back to something you just said, and that's the $40 billion.
By the way, just so you know, a lot of banks are lending a lot more today. So they're doing it in anticipation of some of these changes.
Mm-hmm. And is that what JPMorgan is doing?
A little bit, yeah.
And where is the lending specifically, would you say, is the bulk of the lending?
I think, I was just reading some reports flying out here. Some will say commercial banking, some will say, markets-related financing issues, balance sheet issues. Remember, the needs of all these global investors are huge. So, banks constrain themselves sometimes, like even providing repo because of some of these rules. So I think it's literally across the board.
Does it indicate where we are in the macro economy based on where the lending is?
No, but lending creates money. Okay, so when the Fed buys securities, it creates money, and when banks lend, it kind of creates money. So it's kind of a bullish thing, which is happening right now.
Jamie, you just talked about this $40 billion in capital. You said that at the Bernstein conference as well, and you said that money could be used as an acquisition, for an acquisition. What are you considering?
I'm shocked that people think that's shocking. I don't have anything in mind. I'm simply saying, yes, of course, it could be used for that, if it makes sense. If we did one, I'd explain to the shareholders why we're doing this, why it makes sense. It will make sense. It won't be something that'll surprise people in a terrible way. And so, and of course, I'll remind people, I'd rather we could invest organically. So it's quite clear, organic growth is the best kind of growth. It's your people, it's your culture, it's your systems, it's your tech. You're not taking on a whole new different things. Mergers can be very tough, and we're quite conscious of that. So it doesn't mean we won't do them. And there may be we've done a lot of small ones, by the way, that you don't even know about. First Republic is $300 billion of assets. I don't know how you'd measure that, but that was a massive acquisition.
That's a massive acquisition by any standard. Right. But look, we know you can't buy another deposit institution in the United States, right? You're at the limit in terms of deposits. So do you want to buy a tech company? Are you going to buy fintech? What are you thinking about?
We look at everything, just to be smarter. And a lot of these fintechs have done a great job. It doesn't seem like that's the likely outcome, but it's possible that someone's going to come. I always say to myself, I don't care what I think. I want you to tell me what you think. And if you come and say, that's a great idea, we'd consider buying something.
What about wealth management?
Yeah, that could make sense too, yeah.
I see.
But in every area, we can do it organically. So you're always going to compare it to an organic possibility. Some people, they're not in that position. They can't do it organically. They have to buy it. I think we have the luxury of saying, no, I can build it too.
Let me ask you about that, because you mentioned the Security and Resiliency Initiative, and you talk about investing in items and industries that are central to the U.S. economy, to defense. I know you've also taken this international. You're going to go to the U.K. and talk about doing it elsewhere. But what specifically have you identified in terms of security and resiliency potential investments?
Yeah. So, the first thing, which I know your viewers know, is that America is still the beacon of light in the hill, is still the arsenal of democracy, the bastion of freedom. I'm quite patriotic in that, and that this country provides safety to the whole world. And it wasn't just our allies. It actually provides safety to India, people who are not allied nations of the United States of America. And I think the most important thing is we have the strongest military in the world, underpinned by the strongest economy in the world. And if you ask me about the dollar dominance, it's dependent on those two things. If those two things disappear, so will dollar dominance one day. That may take 30 years, but so that was the first thing. But we didn't identify it ourselves. It's kind of been identified by the military itself, by the administration, by others. We rely on outside parties for rare earths. We should have been self-reliant, or at least friendly reliant, or neighbor reliant, or something like that. That was true for active pharmaceutical ingredients. The ingredients that go into the drugs that people take, mostly come out of China and India, and then there are things we do in manufacturing that we should have done here. And we didn't keep productive capability to build more bombs and missiles. And so we can't double production. And so all these things, it's like, and the people know it. Now we got to go do it. So this was our effort to say, instead of complaining about it, what are we going to do? And so we looked at what we already do, and then we said we're going to do 50% more. That's the 1.5 trillion over 10 years.
Right.
It's been outstanding. I mean, we've been in contact with thousands of companies. We've already, Todd Combs came in and has done we've already invested $2 billion directly in companies. We're going to beat this 1.5 trillion, I'm pretty sure. But we've learned a lot in the process. Importantly, and this might be interesting to your viewers, we've done research around the shipbuilding ecosystem. We're doing it around the drone ecosystem. We did it around the API ecosystem, around the rare earth ecosystem. And that teaches you what policy should be. And then we're going to promote policy. So, here's how we can keep productive capability, ready to go for another commercial use. But if you need it for military purpose, you push a button, the other stuff goes out. And you can do that for shipbuilding, you can do that for missiles, you can do it for a lot of different things. And so it's been a great effort. We're learning a lot. We have a lot of partners, a great advisory board. And as you pointed out, we're going to roll it out to allied nations, which is UK, France, Germany, Italy, Poland, Australia, Japan, Korea, Canada.
And so you're going to be looking to invest in things like drone companies, shipbuilding, in those economies as well?
Yes. And this is normal commercial business. So it's not, we may do some venture capital type of stuff, but it's mostly just helping companies grow and expand like we do in middle market, corporate banking, and investment banking.
Why did it take so long for corporate America to understand that the supply chains and by the way, elected officials, Congress and the White House, how come it's taken so long to understand that we can't have other countries, particularly adversaries, making our stuff? That's important.
We should have 15 years ago.
Right.
The military, the government, and business should have said, we need to run things that are needed for national security and resiliency the same way companies do. We've got backups for almost everything. And we didn't. Now, you and I can cry over spilled milk, but my view is admit it, acknowledge the problem, roll up your sleeves, get to work. And that's what this is. And you have it. I mean, you have a huge amount of companies. A lot of other people are doing this, not just us. We're just a small part of this. You have the militaries behind it, getting this thing right. They brought in Steven Feinberg, who's doing a great job at that. They've got Besson's working on some of these things. So it's fully engaged. You got to read the book Freedom Forge, how the America got fully engaged after Pearl Harbor. Like, we went from building almost nothing, no ships, no tanks, no aircraft, to we built 144 aircraft carriers in 4 years. There was no car produced in America from 1943 to 1945.
Wow.
All those plants, all of them, and not just GM and Ford, all those plants were building bombers, fighters, tanks, jeeps, ships. We went from building a Liberty ship in 1 year to 2 days. And so we just got to get this machine going, and hopefully this will get it done fast enough.
Well, you've always been a patriot, Jamie, and I love that about you. Let me get your take on what you're seeing around the world, given what the effort is in the United States. You're just back from China. Yep. The president obviously had his own trip to China, but what did you do in China? What can you tell us about what you're doing in China?
Yeah. Well, you want about the world, or you want about China?
China.
So we've been in China for a long time, and we have China, we got Hong Kong, got Taiwan. I went, by the way, from Shanghai to Taiwan.
You did?
I had to stop at Okinawa because you're not allowed to go direct. So we have a lot of clients in Taiwan too. So we've had a China conference for years. The 3,000 investors from around the world. When we bank people in China, we bank some Chinese companies, only those that were allowed to by the United States government or the European government. So we follow the rules that we're supposed to. But we also bank something like, I forgot the number, I'm going to say 2,000 multinationals in China. So we probably bank Fox in China. We probably bank everyone else in China. And we want to, and you want us to, and all these companies we bank want us to, and we all follow the laws of the United States, which they've gotten very tough, and they should. Sanctions, what could be sold there, what could be sold here, et cetera. And it makes you smarter. So I believe what the government's doing is the right thing, full engagement, but do things in our own self-interest when it comes to security. And I think we're actually doing that. And so, and there's more to do. I mean, we haven't quite gotten there in a bunch of these things, but there's more to do. But we'll be okay, and we just got to move quickly.
But it's about.
And the other thing I'd say, very important, when I look at what we need to do, we need to maintain the strongest military in the world, and the strongest economy in the world, and a lot of that's us doing a better job. It's not about potential adversaries. We could do a hell of a lot better job in our own business, our own economies, our own growth, our own standards. Teaching people about civic responsibility in this country. That people, billions of people would come here if you opened up the borders. Billions of people, and we're not teaching our own kids that I would say the Constitution is a legal embodiment of values. Those values are principles: life, liberty, and the pursuit of happiness, freedom of speech, freedom of enterprise, country, God. That's what it's about. Yeah. And we don't teach that anymore. And those values are why those values of freedom are everything. They're more powerful than anything in the world. And we've done a terrible job making that part of our school system. And I put the work ethic in there.
Yes.
I would. It's a good thing to work.
Sure is. You've been working for a long time.
And work hard. And try to do well.
Same.
Treat people well. And so it's all kind of one big bundle of getting this stuff right.
But in terms of China, and I asked President Trump this as well, I mean, it's a balance to walk because here we have an adversary that is surveilling the country, right? Surveillance, breaching our networks, right? I mean, cyber activity. And then you just go and you sit down with Xi Jinping and you have a conversation like your buddies. Meanwhile, that they're, and he said to me, well, they're doing it to us and we're doing it to them. I mean, how do you walk that balance?
Well, that's not my job. I understand your point.
But are they surveilling the company?
I probably, and the president knows a hell of a lot more about what's actually going on than I do. And so, when the government tells us to do something, we salute, but we're quite conscious of that. I do think we need to do a lot more. But, he has to deal with China the way they are, and there's still a lot of trade with it, and China. But it also, like America, like one of the things, I think it's important we keep our military allies and our economic allies. And I think more than just a little, I think it's like geopolitically brilliant. And so to me, if we do that well, that's a great thing, and we should be conscious that's the best way to counter adversaries, is that you keep yourself very strong. And so I understand your point, and I don't know what private conversations they'd had, and he probably's not going to tell you either.
And we've got part 2 of my interview with JPMorgan Chase CEO Jamie Dimon coming up in the 8 a.m. hour, and a lot more of that interview all morning long.